Morning, UPBOptionMillionaires.com. Monday, June 17, 2019. The market's going to open in about half an hour. I'm going to do a quick market video here. I wrote this weekend a couple pieces on the market where I think it's headed. You can see here this morning, S&P 500 futures are flat. We're following that same consolidation pattern that we saw last week where we chopped around a lot, did not move much of anywhere. That's a digestion of the move that we saw off the lows. We got down to 273 on the SPY. I thought 270, 250 would be support. We got down to 273 before we bounced. Look, correlates well with the S&P 500 futures. So it's where I came up to 270, 250 because 2725 was support here. We got down to 2729 before we bounced. Consolidating here. The next move I think is going to be higher. We have the Federal Reserve coming out on Wednesday. That could be what sparks the market to move higher. And ultimately, new all-time record highs. I was calling back in January when we were at our lows. I was calling back at the end of May when we were at our lows, and everybody was talking about this massive recession that was coming. The inverted yield curve, my goodness. Oh, hide in a bunker somewhere for the next 5 years. And we reversed off that. We're looking at new all-time record highs. S&P 500 futures to new record highs, and I think SPY is going over 300, possibly in the short to medium term, as crazy as that sounds. But it remains to be seen. Obviously, this digestion here could be setting up for a move to the downside. Let's be realistic. Where we get supported about the 2800 level before we bounce, and that put up a nice inverted head and shoulders pattern. So remains to be seen where the market's headed. But if you look, pull up a chart for the VIX. The VIX looks like it's going to break down here. We're rolling over. They're going to get down to about 12. The VIX hit its highs back in May, has been rolling over since, and I think we're going under that 15, possibly into the Federal Reserve. We're going to paint, and we're going to get down at about the 13 level this week. Is that crazy to call? Which would mean we'll get about 293, 295 on the SPY this week. Some charts to look at. Small caps, that's really what we have to watch here because they've been leading the market really since the election in 2016. You can see the election in 2016, I've talked about this a bunch. Heading into the election week, it was a Friday. Small caps were the only green person out there. The S&P 500 was red. The NASDAQ was red. And heading into the election week, the NASDAQ S&P 500 were down something like 8 or 9 days in a row. So for small caps to be green, and I think they were up some 1%. And then they launched a massive, I think it was a 13 consecutive day rally after the election. Got into this, I call this the election channel, broke out of it to the upside last year, pulled back. Now we're trying to get back up into it again, and I'll just pull up real quick. You can see we came almost right up to it. We're pulling back here. We're at about 152 here pre-market. So I'd like to see a move back over 153.50 here, get us back in this channel. And then small caps later this year, possible new all-time record highs. When you think about it, you go back to last year, small caps made record highs. They have not made record highs. NASDAQ, S&P 500 have made record highs already. So small caps are kind of lagging. So that's a concern here. We break back up into this channel, and I think would set up well for small caps moving forward. The NASDAQ also, we got that sell signal. It was a great little sell signal here. The market pulled back. We found support. And now we're reversing higher. I think a similar type move here that we saw back in May of 2018, ultimately leading us up, and here we are in June, just a month later, ultimately leading us up to new all-time record highs. Of course, we pulled back, and then new all-time record highs just a couple months ago for the QQQ getting over the 190 level for the first time. Here we are again, nice buy signal off support. I think NASDAQ is going to hit new all-time record highs. S&P 500, the SPY again, we had a nice sell signal. Momentum again also is turned here for the SPY. We haven't got the sell signal yet. We're back up into the positive momentum territory. Look at that. I mean, that bull flag looks even more, obvious here as we consolidate. Another possible day or two gets us a really sharp tightening here of price range before we rocket up over 295 to new all-time record highs. That's just something I'm looking at. And then longer term, some charts to look at. Square for upside. This stock has been waiting to break out here, and you can see this candle. We just broke out of this long-term consolidation here. It's actually been fading, got over 100 back last year in the fall of last year. I think it's the first time we're really starting to get a move here. Square, look, momentum trigger here, and look, the last momentum trigger, we were down at about the mid-50s. We got up to 75, a $20 move. So I think Square could possibly get up in the mid-80s to the low 90s here in the short to medium term. And a stock to look for downside. I covered this weekend as well. And if anyone following the news, Target could not process payments this weekend. Pretty amazing. People were, they were exchanging bread for milk there. And I'll trade you 3 pairs of shoes for a shirt. No, there was no bartering. I'm just being sarcastic. But bottom line is here, after its earnings report, continued to rocket higher, but looks like a possible double top here. And back to the low 80s. So if you're looking for something to put, possibly Target here. All right, UPB, I'm going to be quick. The market is going to open in about 15 minutes. I got to upload this video, but you see the same bears out there. We have noted economists coming out saying, "Watch out for the internet bubble," saying the same things that they've been saying really since 2010 and 11 and 12 and 13. Risks ahead. We know there's risks. That's like saying, the clouds are there. It's going to rain. It might rain. It might not rain. It might get sunny. But at the end of the day, we're on a beach enjoying the weather because life always moves on, and the market has been moving higher since the lows of March 2009. Until interest rates go up and the Federal Reserve and all the central banks around the globe take their feet off the gas pedal and say, all right, we're not going to augment asset prices higher, the market's going to continue to move higher. The irony is the bears are like, oh, this rate cut will signal the top for this market. No, rate cuts have signaled easy money, and easy money is what's been fueling this market. Bottom line. End of sentence. Period. Exclamation point. Anyway. All right, you baby. I'll see you in the chat room. Everyone have a great trading day. Goodbye.